All right, good morning. This is Brian Lysing with Financial Brokerage. I think we're about ready to get started here. I'd like to thank you for joining our webinar this morning on total living coverage with Jeff Waddington of Genworth Life Insurance Company. Jeff is a life insurance industry veteran with over 20 years experience in field sales, field management, recruiting, wholesale distribution, and relationship management at the producer, marketer, and home office level. And by the way, if you have a Twitter account, I would highly recommend following Jeff out there on Twitter. He always has some great sales ideas throughout the day. We're going to begin shortly. We will have a question and answer period at the end of the webinar. All the questions can be typed on your screen since we have everybody muted right now. You can type the questions at the bottom of the control panel on your screen. And I had asked Jeff to present this morning on the total living coverage product with Genworth Life and linked benefit products in general. They're really taking the industry by storm right now as people realize that they have a tremendous need to protect their assets from the high cost of extended care should they become ill or frail as they age. And they tend to be gravitating towards the guarantees that you find in a life insurance contract. And Jeff is going to go into that in a lot more detail right now. Good morning, Jeff.
Thank you, Brian. I appreciate that. I was not expecting the plug for my Twitter account, so thank you. I appreciate that. Good morning, everyone. Thank you for taking the time today to be with us. And for those of you who were on the or attempted to be on the call, we tried to have this a couple of weeks ago. Technological problems on my end, and I apologize for that. But thanks for joining us today. Hope today is off to a great start for everyone, the first day of spring, and I hope someone somewhere out there is actually experiencing some spring weather because we certainly aren't here in the Midwest. But with that being said, let's jump right in here. Total living coverage is a product that Genworth has offered in the marketplace for several years now, and we really need to sort of start at ground zero and define what a linked benefit product actually is. And with total living coverage, it falls in the category of a linked benefit product. And linked benefits are, as Brian mentioned, really taking the industry by storm. And I'll get into a little more detail on that in a second. But a linked benefit product is simply nothing more than universal life with long-term care benefits. And those benefits can come in many different forms, and there are several different types of linked benefit products out there. Hopefully by the end of this conversation today, you'll have a pretty good feel for where we fit. So here's our agenda. We're going to talk a little bit more about what linked benefits are and specifically total living coverage and provide you with an overview of the product itself. We're going to tell you a little bit about who the ideal candidate is for total living coverage or for a linked benefit product. And then we're going to dive into a lot more of the tools and resources that we have available through Financial Brokerage that can provide you with an excellent opportunity to provide this solution for your clients. So let's talk about linked benefits. And Brian mentioned this, I mentioned it a minute ago. The growth in this marketplace, as you can see through 2011, 2012, you'll see the numbers aren't quite out yet, but the growth rate has been similar to what you see in the 09 to 010 and 2010 to 2011. And if you really want to break it down as to what the reasons behind this are, for those of you who are in the long-term care field, you know and have been told, and me being a former agent myself, we've been told that long-term care is a significant need for our clients, and yet after 35 or 40 years of having long-term care in one form or another out there as far as a risk aversion opportunity for clients, we still are penetrating less than 10% of the available market. So consequently, clients have some serious concerns about spending the money to provide long-term care coverage. And while what linked benefits is going to do is provide them with an alternative to what traditional long-term care might provide. So as you can see, we've got a huge opportunity here. Let's talk about the product itself and get into more of what linked benefits actually are, and total living coverage in particular. Total living coverage, as I mentioned at the beginning, is a universal life product. So that's the first thing we need to keep in mind. It is a life insurance policy. It's a single premium product that couples the life insurance benefit with long-term care benefits. And if there was one slide or one idea that I'd like for you to walk away with today. It's this slide that you're seeing on your screen right now. From your client's perspective, this is really what they need to know. When you're talking with a client about the opportunity to protect themselves from a life insurance event, a long-term care event, or even their decision, and I'll share what that means in a second, there really is absolutely no risk to purchasing a total living coverage product. And when we talk about the ideal client, I'll share with you sort of where you might be looking as far as who the people you want to be talking to. But with a total living coverage product, it really does represent a very powerful combination because we can provide for long-term care if they need it. We can obviously provide a death benefit because it is a life insurance policy. And with the return of premium option, we can provide them with coverage on their decision. If they change their mind, their money can come back to them. So let's walk, the best way to really look at this is to walk through an actual example of what a TLC product might look like in use. So we've got Helen here, who's 60 years old, and she is a preferred risk. And when we talk, if you go back to the care being covered, the life insurance being covered, and the decision being covered, that's really outlined in this graphic that you see on your screen. Helen decides that she's got an underperforming asset. She's got a CD sitting in a bank somewhere earning 25 basis points, doesn't really need the money, isn't really looking to do anything with that money other than wanting to make sure she can provide a legacy. So what she decides to do is purchase or put in $100,000 of premium into our total living coverage product. The initial premium obviously is $100,000, and if she wants to guarantee that she's going to get her money back if she changes her mind, she can put the optional return of premium rider on this product, and after 2 years at any point she can walk away and have $100,000 back, providing that she hasn't used any of the benefits. That $100,000 single premium purchases over $200,000 of death benefit. 2 times leverage. You'll hear the word leverage a lot when we talk about linked benefit products, and it really is a great way to explain it. She's leveraged that $100,000 that she had sitting in a non-performing asset into a $200,000 death benefit. She's doubled her legacy that she's going to be able to leave. And by the way, as you all know, life insurance benefits and proceeds are generally tax-free. But what if happens if she needs care, if she has a long-term care event? She has now taken that $100,000 and leveraged it over 6 times to provide a total pool of coverage that she could use of over $600,000. That's an amazing amount of leverage. And that's why these types of products are starting to really get people's attention, is because you have the opportunity to use your money to leverage yourself and protect yourself in even greater fashion. So let's walk through some specific scenarios with Helen, and if she were to provide or pay for $100,000 of TLC, total living coverage, what does that actually do in the different what-if scenarios? Well, obviously we've talked about the first one, and the first one is the death benefit. And a lot of times people overlook that, or people don't necessarily give that enough credence, and I want to make sure that we talk about that today, because the death benefit part of this is as significant, if not more so, than the long-term care conversation. Everybody has a pretty good idea that at some point they're no longer going to be on this earth. Life insurance as a concept to people is much more familiar than the idea of long-term care or picturing themselves needing long-term care. So I want to make sure people understand that. Don't overlook or don't skip through the life insurance conversation. If you had nothing more than the opportunity to help your client reposition an asset, an underperforming asset, and all the benefit that you got from it was taking that $100,000 and providing twice that in a death benefit for Helen here in this case, that's still a significant advantage for her. So we obviously can provide the death benefit. That's scenario number one. So if she puts in the $100,000 and passes away tomorrow, or as an old sales trainer of mine used to say, becomes the hood ornament on a Mack truck tomorrow, we're able to provide a $210,000 tax-free death benefit to her heirs. That's a really great deal. But let's talk about what if during the course of she purchased the product and over the next 5 years she had some need for long-term care protection. She didn't use the whole pool, but she used about $80,000 of benefit to provide and offset some long-term care that she needed. The difference between the death benefit and the amount of money that she used in her to pay for her long-term care benefits, and then she passed away, would still be provided as a tax-free death benefit to her heirs. So we're still dealing with the $210,000 total. $80,000 of that came from long-term care coverage or came as a long-term care benefit. The balance, $130,000, came when she passed away. What if she needed the whole thing? What if she got into a situation where she needed an extended amount of long-term care coverage, and she had to use the entire $630,000 pool that we talked about earlier? Even in that scenario, there will always be a residual death benefit, which is always going to be 10% of the initial death benefit, or $21,000 in this case. She could use $630,000 of long-term care benefits and still have a $21,000 life insurance policy at the end of her life. That's a massive amount of leverage that we're providing. And then, of course, the other side of it, okay, so we've talked about the death benefit. We've talked about what happens if she uses a part of her long-term care pool. We've also talked about what if she uses all of it. Well, what if in 3 years, 5 years, 10 years, she hasn't used any of it, and she decides that, you know what, I just don't want to keep this policy anymore for whatever reason. She can walk away at that point and still get her entire premium returned to her. So the death benefit is covered, the long-term care benefit or the need is covered, and if she changes her mind, there's no risk to her. So let's talk about who the ideal candidate really is for this. I've kind of mentioned it briefly as we talked about Helen, but the target client for this type of a product are really those folks who are between the ages of 50 and 75, who are in good health. Couples are really good for this product, and I'll explain why in a minute. They obviously have some assets to protect. They may have life insurance that's expiring, maybe a term life insurance policy that's expiring, and aren't quite convinced that traditional long-term care is the right way to go to protect their assets. I'm sure all of you have clients in your book of business that look exactly like this. And it's not a perfect fit for everyone, but it is a great fit for those folks who fit this target client profile. Now I want to share a little bit about some of the tools and resources that we have available. And many of you may have heard or may know of Lincoln Life's MoneyGuard product. MoneyGuard has been around for a long time and is an extremely competitive product. It is the market leader in linked benefits. There's no question about that. And what I want to do right now, for those of you who are familiar with MoneyGuard, is just sort of do a little comparison and contrasting. There are a couple of things that are different, and no one else has what we have with TLC. And I'll share some numbers with you as we go forward, but this is a fully underwritten product, and I want to make sure that people understand that we do fully underwrite for both the life insurance and the long-term care benefit. What that will do for you and for your clients, because if you recall, go back a couple of slides here, we're looking for folks that are in good health. We're not looking for folks that have an impending long-term care event coming, obviously. So the folks that are in good health, who are willing to go through an underwriting process are going to receive much greater leverage than those who don't. In addition, we with TLC, we offer preferred health discounts, which many other products don't, and we also offer couples discounts, which is why it's important, or part of the target client profile is having that, is looking for couples. And I want to give you an example of how our guaranteed values with TLC compare to the market leader, which is MoneyGuard. And as you can see, at all of the ages, 65, 70, 75, 80, the TLC death benefit is greater than the Lincoln MoneyGuard product. The LTC pool is almost $100,000 more, and the monthly maximum is over $1,200 a month in long-term care coverage more than the market leader. Now, some of you might be seeing that down there around age 88. I want to make sure that we address what the situation is here. For those of you who are familiar with life insurance secondary guarantees, what happens at age 88 with our product is it falls into a secondary guarantee mode where benefits are slightly reduced, but not significantly in comparison to what Lincoln MoneyGuards do. But keep in mind how life insurance guarantees work. If you see that little star next to it, and there's a paragraph down below that talks about it, and I'm basically going to summarize that paragraph. But in order for those numbers to come true, what has to happen is we have to be at our guaranteed assumptions from day one of the policy and remain at those levels for the life of the contract. Only then would you see at age 88 the secondary guarantee and the benefits drop slightly. Chances are that will not happen. We're not at our guarantees right now. So at any point that the guarantee is not in force, whether it's 1 year from now, 2 years from now, 5 years from now, will it have an impact on when the secondary guarantee kicks in. If no policy loans are taken, TLC is the only product that will guarantee not to lapse and will never ask for more premium. MoneyGuard can't say that. So that's tool number one, is we've kind of provided with a compare and contrast of who the linked benefit market leader is. And I also wanted to share with you, for those of you who have written Genworth Long-Term Care in the past, and you might be familiar with this, but we actually have a cost of care app that can be downloaded from the Apple iTunes store, where you can plug in the different geography of where you're at and the different costs associated with homemaker services or home health aides, adult day health care, the different costs associated with long-term care, is to provide your clients with a very educated, very specific amount that they could target for to make sure that they're covering their long-term care need. Great app, and it's really, really useful when you're in sales situations. We have different opportunities and different ways to submit the business, and the folks at Financial Brokerage can help you with that. I just want to touch on a couple of them. One specifically is that for those of you who have written life insurance with us in the past, I sincerely, first of all, appreciate that. But secondly, you may be familiar with our Life Quick Request process, which is a application fulfillment process that at the end of the day takes away your paperwork responsibilities and puts those responsibilities on someone else, so you can spend your time doing the things you do best, which is talking to clients and helping them with their planning. We have just introduced, within the last 2 weeks, a very similar process for our TLC product. Very excited about this. This is going to be a game changer. No one else in the industry can do this as well as we can, and I will give you some statistics around our life insurance quick request process to give you an idea of where we're going with the TLC platform. We have had over 100,000 tickets in the last 2 years submitted through our life insurance process. And what we've been able to do is turn those cases around in 50% less time and place almost 10% more of them. If you think about that, for just a minute and how that would impact your business, if you did, for example, 100 life insurance apps in a calendar year, 10% more being paid is another 10 applications that got paid versus doing it in a long-form application process. And you were able to do it in half the time. It is a really, really robust process. It's really simple to use. Clients love it. Agents love it. So when you have an opportunity, as we're going through some of this stuff today, if you want to learn more about it, give the folks at Financial Brokerage a call, and they can help you walk through it. As I mentioned before, this is a fully underwritten product, so I want to make sure we touch on the underwriting classifications. For the life insurance product piece, we will offer a preferred and a standard no nicotine, as well as a standard nicotine use. And on the long-term care side, we do offer a preferred and a standard rate. Most other products out there that you see do not have the underwriting classifications that we have. They're generally just standard, and that's all you can get. How about marketing? We all want to talk about marketing, and I'm going to share with you another resource toward the end here, but we've got some great consumer pieces that you can use. We've got incredible training and education for you, sales ideas, and I'll show you where to find some of those and go through a couple of them with you in a minute. We have got a really robust package available for you to bring TLC into your business. Sales ideas, how to pivot in a conversation from a universal life to a TLC conversation, who the target clients are, and even a piece on how to reposition an asset, an underperforming asset. So here's the summary from this particular PowerPoint, and then I'm going to get into another piece here in a second. But what is TLC? And this has been a really quick overview, and we can get into a whole lot more detail. You can get into a whole lot more detail on your own, or also with the folks at Financial Brokerage, or at the end if you have questions. But I don't want to take all day to go through it. TLC is an amazing combination of universal life and long-term care, and it's, as you saw from the growth factor that you've seen over the last few years, it is really resonating with clients as a way to leverage their dollars, leverage an underperforming asset, provide much more in benefits to themselves, their heirs, and if they change their mind, they can get their money back. So I'm going to give you a second to write this website down. It's genworth.com/life-sales-center, and that's where we're going to go next, because I want to share with you what this looks like and what you can find. I think we have, and obviously I'm biased because I work for Genworth, but I absolutely believe that this is the greatest product and education and sales website that any life insurance company can provide. It's not password protected. You can get all of the information that you need about any of our products all right here. This is the home page, and it's very simple and quick and easy to use. So the Life Sales Center, if you go to the products link and you click on Total Living Coverage, all of the things that we talked about today and much more are all available right here on this one page. If you look down the right-hand side on the, as you look at the screen under Marketing Materials, we've got the Sales and Features Guide for you, a quick reference guide, the consumer brochures that you can use, what the underwriting guidelines are. We also have a couple of recorded presentations out there on understanding the illustration and how it looks and the things that are important, and also comparison pieces related to MoneyGuard, and also Pac Life is a fairly significant player in this market as well. So if you look at those comparison pieces, you'll see that, as I showed you on the MoneyGuard piece, the TLC product really is a market leader. In addition, I want to point out the TLC app. We now have a TLC app, and unfortunately I'm using a Windows machine, so I can't show it to you right now, but if you have an iPad, you can download the TLC app, and it is a really, really good sales track for you to start the conversation with clients, because it does not get into product specifics as much as it gets into asking some questions to the client and sharing with them how they can leverage dollars. It's really, really powerful. So if you have an opportunity to get that downloaded on your iPad, it is available for right now for iPad only, but we're working on the Droid platform and everything else as well. In addition, if you want to, you can download apps and forms and other training materials are out here as well. And I also wanted to share with you, if you go over to the sales support section and you have sales ideas, total living coverage, you click on that. And here are some of the pieces, a couple of them you're familiar with, and a couple of them that I mentioned earlier. Pivoting from a universal life to a total living coverage product. Pivoting from the actual traditional long-term care conversation to the total living coverage conversation. And I think the one that's probably the most used is this one. It's the repositioning an underperforming asset. And I want to talk specifically about this because there are a significant portion, or there is a significant portion of dollars that your clients are sitting on that are sitting there basically doing nothing for them. And this is a piece that you can use. Talks about a case study with Richard, who's 60. It's a similar sort of conversation as we had with Helen earlier in the PowerPoint, that talks about what are the advantages of taking an underperforming asset like a CD, where they're getting 25 or 30 basis points or whatever it might be. What are the advantages and what are the benefits to taking that asset that their client is planning not to use and repositioning it for a greater value to them and their heirs? This is a really, really strong piece, and a lot of our sales are driven by this piece. I say a lot and not all, because the other repositioning of an asset that I want to make sure I address, and 25% of Genworth's TLC sales come from what I'm about to tell you, and that's the old school 1035. You can 1035 an underperforming life insurance policy. Your client is 60 years old. They've got a life insurance policy with cash value in it that in-force projections are showing that will not last as long as they want it to. They can actually 1035 money from an old life insurance policy into TLC and use that as the single premium as long as it's over $50,000. That's our minimum. But that's another opportunity, a significant opportunity for asset repositioning with your clients. You can continue to provide them with some life insurance benefit, but take advantage of the cash values that will, if you don't do something with it, will likely get eaten up by the increasing cost of insurance, and 1035 that into a total living coverage product. And as I mentioned before, it makes up a significant portion of our production and our sales, 25%. I'm not sure why that popped up. 25% of our sales come via 1035. That's a great opportunity. Okay, so I want to go back to the website and share with you a couple of other things that you could do. There's actually a couple of articles you can download. They're the same article, but you could take this article and put it on your letterhead and send it out to clients. Great opportunity to see what interest you might be able to generate. There's all kinds of these types of tools and resources and leverage points where you can take, if I can go back to the website, oh, there it is. You can take this information, do some deep dives on the details of the product, do some deep dives on the sales opportunities and who you're in your client base, who you can target with this, and have a great opportunity to help them protect themselves and provide them with some additional leverage. So with that, I would like, that's sort of the high level, the 30,000-foot view, so to speak. It really is a great product. It really is a great opportunity for you to do planning with your clients that are concerned about long-term care but just haven't quite convinced themselves they need to buy the traditional, and still be able to leverage the life insurance conversation as well. So with that, what I would like to do now is turn it over to Brian and see if we have any questions that we can try to answer for you.
Okay, and thank you, Jeff. I appreciate taking the time to do this, and a lot of great, valuable information. I've seen this before, and I took some additional notes that maybe I didn't catch the first time through, so appreciate that. As we're waiting for folks to type in their questions there, one thing that came to mind as I was listening through there, I know you'd mentioned policies, existing policies, that maybe the cash values are diminishing in them. Something else I've come across are really the opposite, policies that are cash rich. Maybe it's on an old whole life chassis and they're not getting much leverage at all. I know I was looking at one with somebody the other week, and they had maybe $50,000 of cash for a $70,000 death benefit, and that just seems, kind of ridiculous. Let's leverage those dollars.
Oh, that's a great, absolutely. That's a great point.
Leverage those dollars a little bit more than what the client's getting right now. So it can go either way, underperforming or overperforming. You're not getting the bang for your buck that you really could. I know, Jeff, you looked at showing all these the letters and pieces that folks can use to send out to existing clients or to try to find new ones. Through Financial Brokerage, we actually have some resources to help you find those people. Genworth has got the pieces to use, but we've got our leads on demand system where you can actually drill down, use the same criteria that Jeff presented here in the webinar, and plug those in and get a list of the names and addresses in your area, and then you can use these pieces to mail out to exactly that group of people. We can help you do that. We also have an email campaign tool out there, and that's something you can use with your existing clients. Take these same pieces, and through this campaign monitor, you can email the same information to them really as often as you want to there. So
that's an exceptional resource.
So let me take a look at the questions here, and let's see here. Keep in mind, you can type them in here. We do have one from Tim. He's asking about the tax implications of receiving benefits, and if you could touch on that, if there are any, or how that works.
I'm assuming that the question is related whether it's qualified or non-qualified.
Yeah, does it qualify?
It is qualified, yes. It is a qualified long-term care benefit, which also does mean that you need to have the partnership training in order to be able to be appointed and sell it. But it is qualified, yes.
Okay. Yeah, and that reminds me too. Yeah, you've got to have the partnership training or the long-term care continuing education to sell this product. In fact, any linked benefit where you see the word long-term care in the title or in the product material, that's a good indication that you've got to have that training.
Absolutely. And that's sort of something to bring up too, as far as just understanding the marketplace, because there are a lot of options out there for clients. There are some linked benefit products like ours. There are some companies that have traditional life insurance policies with what they're calling chronic illness riders, which are sort of posing as long-term care but aren't really. And there's there are different requirements that are need to be met. So just keeping in mind that that's kind of what the marketplace is showing. But overall, I think what you see with the development, at least from the manufacturer side, is whether it's a traditional long-term care rider, whether it's a chronic illness rider, whether it's however it's structured, there is a significant amount of momentum heading toward making sure that we can provide opportunities for clients to leverage their dollars more effectively, whether it's traditional life insurance with some type of a rider or a linked benefit conversation. Clients still need to be talked with about the risks associated with long-term care, but they need to see it, at least based on 35 years of market research and less than 10% penetration. They need to see it done in a different way, and that's where a lot of the product development right now in the industry is going, is toward things like this.
All right, I appreciate that, and I don't see any other questions at the time. If anybody thinks of something later, I know a lot of times it's a lot of information to digest, and you'll think of something this evening or maybe tomorrow morning. Feel free to give me a call at Financial Brokerage. I can be reached at 800-475-5555. My extension's 3371. If I can't answer it, I know how to get in touch with Jeff, and we can certainly get it answered for you there. Additionally, if you run across somebody or know of somebody that you think would benefit from this webinar, from this information, it's another producer you're aware of that has some inroads with long-term care or life insurance, by all means, don't keep us a secret. Let them know who we are. I'd be happy to speak with them. Never too busy to see who else we can help out there. So I'd like to thank everybody for attending today and taking time out of your workday to do this. And thank you, Jeff, for presenting. We really appreciate your time this morning. And
My pleasure.
We'll see everybody on the next webinar. Have a good day.
Thanks, everyone.